JB here. Hope I was doing outstanding. Thursday, September 25th, 323. On this fine afternoon, talk really quick about the market. Some names I'll look at go from there. S&P down a little more than 0.5%, off the lows from after the open. And it looks like we might have 3 sessions in a row to the downside. I'm trying to see where I read that. I don't know if it was on the Wall Street Journal, but it might be the first time all major indexes have closed in the red for 3 consecutive sessions since March. I don't know if that's accurate because you look at some of the days in April, but needless to say, now you have the headlines. Is this the start of a major pullback? Why is the market selling off? And it's not even like, we're not down 1.5%. It's still down 0.6%, pretty substantial, but there's no major catalyst, right? And this morning you had the weekly jobless claim numbers come in much better than expectations, right? 20,000. The estimates for 233,000 was only 212,000. GDP number was revised to the upside, so that also came in stronger than expectations. So is the Fed wrong? And the economy is doing great. They shouldn't be cutting rates. I don't think that's it. It just, to me, markets were at all-time highs coming into this week, some profit taking, and then, hopefully we find some support at some point. Markets can chop around and finally, start to head back in the right direction. Things of note, and I always try and do the glass half full, glass half empty scenario. The amount of stocks trading over their 50-day moving average just crossed under 50%. So 50% of the companies on the S&P are under their 50-day moving average. I don't know how much. There's a lot of different things I look at. That's just one of them, right? One of many metrics. So you can make the case that some of the lot of the move up, and we've seen it with the Mag 7 and some of these mega cap names, have their rallies this year has kind of allowed some other names to underperform. So the market breadth, the amount of all the stocks going in the same direction hasn't been. I guess you would say it's not the best indicator because of some of the larger cap names have kind of led the rally, but definitely still some I'm watching. Also, the amount of stocks over their 200-day moving average, that's still 60%. So you don't want to see that get near the 50 handle. And then last but not least, here's the VIX, and it was up 7% earlier. It's at 17 right now. All this more or less moot points if the market finds some footing tomorrow and heads into the weekend on a positive note. If not, over the weekend you can have more rumbling, especially yields are up again here today. And then it's going to be, is the AI bubble, is that ready to pop? Whatever. Those arguments can be made. To me, I keep using the word, the great circle jerk, right? The great CapEx AI spend of 2024, 2025. To me, that is like one of those things that you can make a case, right? That, there's bubbles over the years or the things that have caused bubbles. And has this, number one, caused a bubble? And number two, like, if at some point the musical chairs ends and there's no chairs left of folks doing these big investments. So hey, more rants for other days. I've been trying to do some research earlier today to try and figure out the exact dollar amount of all the names, who's on the hook for what, how much to each company. Try and get all those little lines. All the different companies draw lines from NVIDIA to Oracle to OpenAI. So things to do maybe this afternoon or before the open. Anyway, quick on some individual names. That's kind of the overall market. I talked about that 660 handle. Couldn't hold that. Got back up to 659 after the open. Found more pressure down to 654. So now we're trying to find other areas of support resistance, and it's not like we haven't. The market wasn't down in the 650s a week ago. So maybe we'll have to see how tomorrow plays out in regards to where it hits support. But 654, 655 look like a key spot there. Maybe if we can chop there tomorrow, find some support and bounce. That might work out pretty. Excuse me. That might provide some decent support. Otherwise, kind of wait and see. All right. So just quick on individual names. This morning I had on to watch this. Pretty much Broadcom's always my go-to when it comes to finding some hedges to protect from downside, or at least play for short-term downside. Sure enough, today market couldn't get back over that 660. I was looking for some decent risk-reward strikes to play for downside. Funny enough, at this time yesterday, I was on the rant talking about getting those 320 puts. So when the market started to tumble a little bit this morning, I'm like, up 317.50s look interesting on a risk reward basis. Got those. Then there was follow through, and Broadcom broke under 330. Got all the way down to 328 or so, and Locked some in for 100% to cover costs, and then as it started to bounce, didn't want to be in a spot where those profits eroded, so I locked the rest out for 20% gains. So of course, when you lock some in to cover costs for 100%, you pretty much cut your profits in half, right? It's not like I'm going to be able to sell. I didn't sell them all at 100%. So I mean, unless I sold the last half for another 100%, then it'll be in essence 100% gain. But on the flip side, I didn't want to see the profits erode and see the position go from green to red. So I closed the last out. Not only that, the market was starting to bounce. So then I went on the flip side and looked for some call opportunities. Read it all the way down to 220 this morning. Just remarkable. I mean, I don't know what time it hit 282 on Thursday, but it might have been late morning. So you're pretty much talking in a week's time, it dropped $60. Just shows how volatile it is, right? And unfortunately, with that, the premiums are expensive. So I went to find some decent risk reward call strikes on the call side. And I'm looking, do I get to 245s? They were like 90 cents, the 247.50s. So then I just pulled the trigger on the 250s. And I'll continue to hold those into tomorrow. The thing with Reddit, $16 out of the money right now. It's at 235 or $15 out of money. But it's had 6-7% swings on an intraday basis. So, do a 7% move tomorrow will make those calls some nice multi-baggers. So that's the thought process there. I'll continue to hold those. And then I was being selective, right? And I don't want to be. We can gap down 1% tomorrow. We can gap up 1% tomorrow, and I don't think any scenario would surprise me. So I just want to have at least some kind of protection for downside. So earlier, about an hour ago, I got back into Broadcom puts. Excuse me. This time I got the 320. So I'll continue to hold those into tomorrow. Could be another one of those setups, right? And we've had these on Fridays too, where the market's weak. We have a gap down. Markets hit lows about 10-15 or so and bounce, similar to what happened today. And then I'll lock those puts in and then look to get some calls for a bounce. I don't know if that scenario is going to play out, but that's the thought process there. And I'll hold those puts into tomorrow. And then some other names here. And you know what? I kicking myself for missing Oracle as I'm talking about the big circle jerk. I mean, here's Oracle's kind of like the name that, in my opinion, put this story in my head, right? The big investment from OpenAI, the $300 billion that OpenAI is on the hook for, and this big this $500 billion that Oracle has in whatever they're calling it, deferred revenue or whatever. So here's a name you look at. It's just hit. I forget the exact market cap, but it's come off its highs, and I was looking for other opportunities to play for downside here. In Oracle, I was looking, the 270s look interesting, but here it is at 291. Don't be surprised tomorrow if there's market weakness or continuation. I'll look for possibly that might be a name I get some put hedges on. Now, flip side as well, Duolingo showing some relative strength. The market was falling and Duolingo was holding up, and I'm like, oh, here we go. Looked like it was going to break out, got all the way up to 310, and then kind of fizzled. So disappointing, all the way down to 307 into earlier in the afternoon. And then it's bounced here. It's right pretty much at the highs of the day. Obviously, need a huge move for my 340s. I still have a decent shot here on my 325s. I'm going to hold those into tomorrow. They're freebies. I'm not going to go on a big rant on Duolingo, but if depending on what it does tomorrow, hopefully I'm able to lock some of the or all of the calls in for some nice profits. If I'm able to do that, I'm going to roll out into next week on Duolingo. Let's see here. After the close day, we have Costco, right? Costco always reports great numbers. The thing with Costco, we're back in that, tariff impacts. What is that going to look like for Costco? So I'm sure all eyes will be on that. Not much in the way of earnings after the close besides that. I'm trying to think of some of the other names here. SERV Robotics, gosh, all the way down to 1161. I don't know, was it yesterday? It was at 15? I think it hit 15 at the open yesterday. So you're talking a $3.20 move in 24 hours. Just remarkable stuff. To me, the price discovery is a word I used to use a lot, right? Because when you look at a name like SERV Robotics, what is the valuation of that company if it does $60 to $70 million in revenues next year? Is it a $25 stock? Is it a $30? Is it a $10 stock? Right? And you look to see a stock trade in that wider range and see its market cap go from whatever 800 million down to 550 million in a matter of 24 hours. It's just remarkable. So the good and the bad. The good is it means that I think there's still battle between the bulls and the bears figuring out the valuation. So that's kind of good. So the good would be if the bulls are right and it takes off. The other side is the bears are right, and maybe it goes back down to the 8s and below. I still don't think that's the case, but I think that explains a lot of the volatility recently and the huge swings. Not going to end any calls here today. Maybe tomorrow if it finds support. I think that's it, folks. 6:57 here on the SPY. Tomorrow we get PCE data. So you couple the weekly jobless claim numbers, the GDP data this morning, and then a much cooler than expected PCE data. And it's almost like I don't know if that would be a good thing, right? And you don't want them if it's hotter than expected. Obviously, the Fed cutting rates is not a good thing, right? For inflation, you would think. But if it's substantially cooler than expected, I think either side of that, you don't want it too hot or too cold. So I don't think it's going to move markets much, but you never know. And if there's a huge surprise either direction, I wouldn't be 1.5% down day on the S&P. So I'm not getting my bear suit on, right? I'm still cautiously optimistic, but I'm just open to scenarios. Anyway, that's it, folks. Have a great day. I'll be back. Rock and roll.